Welcome to your daily stock market summary from MarketSnap. Hey everyone, I'm thrilled to be back with you to break down the latest action in the markets. We've got a packed day with some intriguing moves across the board, from record high margin debt raising eyebrows to AI-driven momentum, mixed economic signals, and some standout performances in individual stocks. So let's dive right into the key highlights and what they mean for us as long-term investors, while also keeping an eye on short-term trends. First up, let's take a look at how the major indexes performed today. The S&P 500 nudged up slightly, showing a modest gain, while the Nasdaq also posted a small increase, reflecting some resilience in tech-heavy names. The Dow Jones, however, dipped just a bit, signaling a bit of caution in the broader market. Meanwhile, the Russell 2000, representing smaller companies, outperformed with a solid uptick, hinting at renewed interest in riskier assets. Overall, it's a mixed picture, but the market seems to be holding near record territory despite some underlying jitters. Now let's zoom out to the bigger economic picture. There's a lot of buzz around persistent inflation worries and souring consumer sentiment as we head into the Fed's final policy meeting of the year. Investors are on edge waiting for Friday's inflation report, which could be a real gut check for the economy's vibe. On top of that, jobless claims hit a 3-year low, which sounds great, but the broader job market is showing signs of weakness with hiring slowing down. Some experts are even debating whether the Fed should cut rates this month or hold off, given the mixed data. For us long-term folks, this underscores the importance of staying diversified. Short-term volatility from Fed decisions or inflation spikes could rattle markets, but a balanced portfolio can weather the storm. Shifting gears to the day's big movers, let's check out the large-cap gainers. Meta Platforms and Salesforce led the charge with impressive jumps, likely fueled by ongoing strength in tech and AI-driven solutions. AppLovin and GE Vernova also caught attention with strong gains, showing investor confidence in their respective sectors. These moves highlight short-term momentum in tech and industrials, but for long-term investors, it's a reminder to look at the fundamentals. Meta and Salesforce, for instance, have solid growth trajectories that could support sustained gains. On the flip side, we've got some notable large-cap losers today. Snowflake took a significant hit, dropping double digits after earnings, possibly due to investor disappointment despite beating estimates. Intel also saw a sharp decline, continuing to face challenges in a competitive chip market. ASML and Costco weren't spared either, each pulling back amid broader sector pressures. While these dips might tempt short-term traders to jump in, as long-term investors, we should assess whether these are temporary setbacks or signs of deeper issues. Intel's struggles, for example, warrant a closer look at its turnaround strategy. Looking at the market movers, Nvidia continues to dominate trading activity with a slight uptick, showing that AI and tech remain hot topics. Tesla also made waves with a positive move, reflecting ongoing investor interest despite recent volatility. Intel, despite its drop, was among the most active, suggesting a lot of eyes on its next steps. These names are shaping market sentiment right now, and for us long-term players, they're a reminder of how innovation sectors like AI and electric vehicles can drive growth over time, even with short-term bumps. Diving into the most active stocks by volume, Nvidia again takes the spotlight, alongside Intel, showing how much attention these tech giants are getting. Smaller names like UiPath also saw heavy trading after a massive jump, likely tied to earnings or strategic updates. High volume often signals short-term speculation, but for us, it's a cue to dig deeper into whether these moves align with long-term value creation or are just noise. Let's talk earnings now, as it's a critical time with several key reports this week. Companies like Kroger, DocuSign, and Hewlett-Packard Enterprise are on deck, and their results could sway sector sentiment. Notably, Kroger's earnings came in today, missing sales expectations and causing a drop in its stock, though guidance remains intact. Five Below, on the other hand, beat estimates and raised its full-year outlook, which could signal strength in discount retail. For long-term investors, earnings season is a goldmine for insights. Focus on how these companies are positioning for future growth rather than just the headline numbers.
Get exclusive AI summaries of every earnings call,
No more reading hours of transcripts. Access revenue segmentation, 5-year analyst estimates, SWOT analyses, and full financial statements. Plus track upcoming earnings, dividends, and market events with MarketSnap's calendar app. Create a free account at MarketSnap.com. Zooming out to the past week, some large-cap gainers really stood out. MongoDB and Microchip Technology posted massive gains, likely riding the AI and semiconductor wave. NXP Semiconductors and Intel also saw strong weekly upticks, reflecting renewed interest in chip stocks. These short-term surges are exciting, but for us long-term investors, they're a chance to evaluate if these companies are building sustainable competitive edges in high-growth areas. On the other end, weekly losers included Pure Storage, which took a brutal hit post-earnings, and Symbotic, down significantly on what looks like profit-taking or operational concerns. CoreWeave and Supermicrocomputer also lagged, showing how volatile AI and tech plays can be. These drops might be buying opportunities for long-term holders if the fundamentals remain intact, but caution is key. Don't chase falling knives without a clear thesis. Finally, let's touch on sector performance over the past week. Energy led the pack with a solid gain, likely boosted by oil price dynamics and geopolitical factors. Technology and industrials also performed well, showing strength in innovation and infrastructure plays. These trends are worth noting for short-term rotations, but as long-term investors, sector strength can guide where to overweight your portfolio for decades-long growth stories. On the weaker side, healthcare saw the largest weekly drop, possibly due to regulatory fears or earnings disappointments. Consumer defensive and real estate sectors also underperformed, reflecting broader economic caution. While these dips might spook short-term traders, for us, they could signal undervalued entry points if the macro headwinds ease over time. MarketSnap brings everything long-term investors use daily into one clean, fast platform. Explore stock financials, SWOT analysis, valuation ratios, 5-year analyst estimates, and our intrinsic value calculator, built with real fundamentals, not hype. All in a layout that's simple to read and ridiculously fast to navigate. And when you want to talk investing, join Nexus, our community where investors share valuations, posts, and stock discussions, all connected directly to the data. Use our stock's intrinsic value calculator to run and save real valuations with no spreadsheets. Share your analysis and valuations with others in the Nexus community. Get daily market summaries in video, audio, and article formats. Track the market with our earnings, dividend, and economics calendar. Our homepage gives you a real-time market overview with interactive heat maps, top market movers, and major index performance at a glance. Track daily performances, discover the most active stocks, and analyze performance across different timeframes, from weekly to yearly trends, and see which industries are leading or lagging. It's free to create an account, with optional access to premium forward-looking data. Try it now at MarketSnap.com and invest with clarity, not noise. That's a wrap for today's stock market summary from MarketSnap. Thanks for tuning in, and make sure to stick with us for daily updates and deep dive SWOT analyses to keep your investment strategy sharp. Whether you're navigating short-term turbulence or building wealth for the long haul, we've got the insights to help. See you tomorrow.